Today is April 1st, more commonly known as April Fool's Day. But no, this is not an April Fool's Day joke. In the spirit of tax season, when most of our clients are in the process of getting their 2024 tax returns completed, I want to talk a little bit about income, taxes, and how to receive income legally without paying taxes. Something everybody wants. Did you know that you can receive, if you are married filing jointly, over $100,000 per year without paying taxes? If you're single or head of household, obviously that number reduces to over $50,000 a year. But no, this is not an April Fool's Day joke, and this is legal. In this video, I will talk about how you can receive up to over $100,000 if you're married, over $50,000 if you're single, tax-free, legally. So let's get started. But before we do, I want to let everybody know that the contents of this video does not constitute tax advice, and as always, we ask that you consult directly with your tax advisor or your CPA for your specific tax situation. Now, moving along. Also, please note that this video makes the assumption that you are no longer working, earning W-2 wages, and or you're either in a work optional lifestyle, retired, or simply just no longer have W-2 ordinary income earnings and wages. If that is the case, and that is you, then please listen up, because this is how you can receive over $100,000 a year tax-free legally. So let's start with what we are allowed to pull out of IRAs or 401ks or taxable accounts without paying taxes. Well, let's start with what we call the standard deduction. If you're single, that number is slightly over $14,000 or roughly $14,600 for 2025. If you are head of household, that number is roughly around $22,000. And for married filing jointly, you can pull out roughly $30,000 a year, of which would normally be taxable, but because of your standard deduction, that number is essentially wiped out, and it is no longer taxable. So that's the first step. Step number 2 involves the use of and maximizing the 0% taxable rate threshold for income received from your investments, long-term capital gains, and qualified dividends. Now, there are some tricky elements to this, but when structured properly, you can receive up to roughly $47,000 as a single taxpayer or single filer, and roughly up to $94,000 for a married filing jointly couple taxpayer. Again, there are some tricky elements to this, so you do need to be careful. But income generally received from your investments, long-term capital gains, and qualified dividends can be tax-free if you leverage and maximize that 0% threshold taxable rate. So there you have it, folks. Putting it all together, when you work with a competent tax planning advisor that is going to structure your investments in a way to maximize that 0% threshold and take advantage of your standard deduction with your income withdrawals from IRAs and Social Security and so on and so forth, and your investments are held for long-term capital gains and you receive qualified dividends, you can receive over $100,000 per year without paying taxes. Again, this does not constitute tax advice. I urge you to speak to your CPA and or your tax advisor, and I certainly urge you to work with a qualified financial planner that knows what he's doing, knows how to structure it, and wants to help you reduce taxes over your lifetime from your savings, earnings, investments, and your income. See you on the next one. Have a great day. Find your freedom now.